Honest Apex Trader Funding Review.
Stop. Do not buy that Apex evaluation until you watch this. Passing the test is a joke. Getting paid is the real trap. Look, everyone on YouTube is flashing their funded account certificates.
Congrats.
That's the easy part. What they aren't showing you are the new Apex 3.0 rules. They hide the fact that the funded account has completely different rules than the evaluation. They don't talk about the scaling, they don't talk about the consistency rules, or the payout caps that stop you from ever seeing a real payout. In this video, I'm giving you the full, unfiltered truth, the eval rules, the real funded account rules, the exact gauntlet you have to run through to actually get paid. Apex evaluation rules that really actually matter. It's a lot simpler than you think in the evaluation stage. There really isn't that many rules for Apex Trader Funding. If you're new to Apex Trader Funding, they used to have a very different program, especially the funded. But if you're not new to Apex, the old rules are still here for the evaluation. The evaluation stage really has not changed at all, guys. The number one rule that is going to get you and your number one enemy is going to be trailing drawdown. You have to close your trades by 4:59 p.m. Eastern, no exceptions. Pretty much that's it for the rules, right? All right, so to get funded with Apex Trader Funding in the evaluation stage, you have a pass condition and a fail condition here. So a pass condition is you hit the profit target. A fail condition is the trailing drawdown catches you and it gets you and you blow up. A pass condition is you trade at least a minimum of 7 days. I will say though that a lot of times they have specials like sales like they have right now where you can pass evaluation in only 1 day. So watch out for those sales. Hold a trade pass 4:59, fail, right? So these are the main things that are going to cause you to either blow up or fail the evaluation. For us traders that sometimes forget to close our trades, they do have a fail stop in that will close your trade and prevent you from being able to hold past the close. So it's not absolutely a thing that's going to cause you to fail, but sometimes it may not work. So you definitely want to be on top of that. I've had it happen before, especially on Fridays where it won't catch it and then I end up blowing up. So you definitely want to be closing your trades by 4:59 p.m. Eastern time, Friday. They've made the evaluations really simple, guys. Goal 1, hit the profit target in a 50K account. This is going to be $3,000, which we will go deeper into each account and we'll go all the way through all the different accounts they offer. Just a quick reminder, guys, if you watch until the very end of the video, near the end of the video, I'm going to give instructions on how to enter into the giveaway to get a free Take Profit Trader evaluation. And I've actually reached out to Take Profit Trader to make sure that you don't even have to pay an activation fee. That means that it will be 100% free evaluation to getting the funded account if you win. So make sure you enter into the giveaway. Here we are on Apex Trader Funding's website because there is other evaluation information you need to know. So when you come to here, you're going to be really overwhelmed. There's so much information. It's really confusing, but I'm going to give you the basic information that you actually need to know to pass an evaluation, right? So the first thing you need to know, Apex Trader Funding has two different types of drawdown. They have trailing drawdown accounts and static accounts. The trailing drawdown is going to trail you. They have a big breakdown here. Pretty much if you're in profit or not, it's going to trail you. This is very tough for a lot of people. I have a lot of videos on this channel that can teach you how to do that. I will put them in the description. I'm not going to go into what trailing drawdown is because again, I have multiple videos for that. So static drawdown means the drawdown stays. It is fixed. That's why in a 50K account or 100K account, they only give you $625 of drawdown because it never moves. Don't get sucked into these accounts. $625, even though it's static, is not enough. Here is the drawdown amounts per the account. So a 25K account, they give you $1,500 drawdown and they ask you to make $1,500. So it's even. The 25K account, I don't care what anybody says on earth, mathematically, you have the best edge of winning with a 25K account. These companies and the affiliates that promote them are going to push you towards the bigger accounts because you're then spending more money, more commissions for them, and you end up buying more accounts because you're more likely to fail. Because as you'll see here, the target is going to get inflated. So they doubled the account size, but now all of a sudden I'm only allowed to lose 2,500, but they're going to ask you to make 3,000. There's a $500 difference between the profit target and the drawdown. And it only gets worse as you go up with the account until it's so inflated that you are very unlikely to succeed. So pretty much with the evaluation stage, just don't hit your drawdown and trade your minimum days and you pass. As long as you don't hit your trailing drawdown, that's it. As I said earlier, the other rule, if you hold and you don't close, that technically would be a failed account, but they have a safeguard to automatically close open positions and cancel pending orders attached to a position at 4:59 Eastern. It is a final resort and you should not depend on it though. You do need to be aware of holidays and half-day closures. So in futures markets, you can trade from Sunday night. Right here, this is Sunday night opening at 6 p.m. And then the market is open until 5 p.m. Eastern. It then will reopen again at 6 p.m. Eastern. It's 6 days a week, 23 hours a day. All right. So the consistency rules do not matter in the valuation stage. We'll go through those in the funded account stage, but that's all you need to know to get funded. Again, all you have to do is essentially hit the profit target before your drawdown gets hit. That's it. The rest of the rules will not fail you except for holding your trades over, but they have a very good system in place. But again, I wouldn't depend on it because I've had it burn me before. That's it. That's the only thing that'll fail you. You put on too many contracts, it won't let you go over. You trade the wrong thing, it won't let you. Pretty much they have it set up idiot proof for people. You can't really do anything you're not supposed to do. It's very basic. None of this other stuff matters. I don't know why they put it into the evaluation section. You can have up to 20 evaluations at a time. They did 6 months ago start, if you failed a bunch, they would start saying they're not going to give you more evaluations, blah, but I believe they stopped doing that. This company, guys, let's face it, Apex Trader Funding has paid out the most to traders in history, right? They are the company that has paid out the most. But they have also last summer denied 4,500 payouts out of nowhere for a rule that they claimed existed in their payout structure or in their contract structure that was never there. They got into a little bit of financial trouble. They denied a whole bunch of payouts for no reason. Apex Trader Funding, if you're listening to this, don't get mad at me, man. That's the truth of the matter, and I know it. So don't come at me sideways as an affiliate for that. They ended up recovering and becoming a good funded company again. They are very trusted now. But the way that their company is set up, they allow traders to have 20 funded accounts being copy traded. So if you're thinking about really large accounts, the 300K accounts at 20x, and then the way, which we'll get into their payout structure, it kind of sets them up to every once in a while, a good trader will come along. And with these 20x accounts at 300K size, they end up having to pay these traders out almost $1 million. So this is a lot of risk for the company. Shit rolls downhill. It then becomes risky for the trader to trade with this company because of that. Other companies have put in safeguards and pushed these traders into live funded accounts. So that way they don't have to pay out of pocket, but Apex does not do this yet. They are working towards it, but they do not. So there is an inherent risk with this company because at any given time, there could be many traders that have the ability to take these accounts to the full max payout, 4 months later get it, and like happened that summer, they had an influx of traders do that and cause them to deny payouts. So there is a risky part to this company because of that. But I also believe in them and I believe that they have this under control at the moment. So, all right, welcome to the funded PA account section. If you're familiar with Apex in the past, these are new rules that you must follow. If you are new to Apex Trader Funding, don't worry about when I'm referring to old rules. They don't matter to you now. Just as those affiliates and influencers and the prop firm themselves will push you towards bigger accounts, they will also push you towards the rules in the valuation. They want to focus on the valuation. They don't want you to focus on the payout structure. They don't want you to focus on the funded account section, because that's what really matters. The money matters. Getting paid as a trader matters. So keep that in mind when you're taking advice from people and listening to these prop firms. These prop firms aren't your friend, and 90% of the influencers and affiliates are not your friend either. They just want you to buy more accounts. So the old rules are still there. They make it seem like they revamped their whole program to make it better for you, but they never really took away a single rule. They just added a bunch of rules. So trailing drawdown is still going to be your number one enemy. Once you get it past the safety net or the AKA threshold, it goes away, which is pretty standard with any trailing drawdown funded company. So for example, your starting balance plus your drawdown. So that's $100 plus your drawdown of $2,500. That means you have to make $52,600. Once you hit that, that is when the threshold, aka safety net, goes away, and you can no longer go below your starting balance. The account would be blown. And again, all trades and orders must be flat by 4:59 p.m. Eastern time. Something to touch on here, why would a funding company do this? So with the threshold and the safety net, as they call it. So this assures them that they're at zero risk once you get over that amount, right? Not that they actually are putting you in a risk on environment yet, but it's still sim funded account. But what this does is your account balance then can never go below 50,150K account, because if you made 52,600, that's at that point, you would no longer be able to go back below 50,100, essentially giving them a 100 guaranteed buffer of not losing any money, right? Not that they are anyways, because it's sim funded, but just wanted to note that. So the first rule that is different from the evaluation stage is they have implemented contract scaling. So this is kind of the first gotcha. Starting balance a 50K account, 10 contracts max. You can only trade 5 contracts until you're over that safety net. So the safety net in a 50K account, for example, would be 52,600. And then you can trade full size 10 contracts after that. This is a one-time threshold in each account individually. Once you hit it, you can trade full size forever then. As you guys see in the evaluation stage, this does not exist. It is for only the funded accounts. All right, the rule that I get the most questions about, the most confusing rule maybe ever introduced in prop firm trading. Let's go to the Apex Trader Funding website to make sure that I correctly explain this. All right, here we are on the Apex Trader Funding website. We have the 30 negative P&L rule. Good name, huh? So the best way to understand this is that the total profit you have in your account at that point, you cannot lose more than 30% of it in a single trade, which, depending on your profit, is not a hard rule to follow. Let's look at an example here. If you have $3,000 of profit, meaning your account balance is at $53,000, you cannot lose more than $900 in a trade. Not that complicated, guys. It's just the way they explain it is extremely complicated. I have no idea why they made it so complicated, but it is what it is. So for your accounts that are new or have low profits, the 30% rule is based on the trailing threshold. So 50K account is $2,500. That's your trailing threshold. And that would be 750. Look, guys, you should not be risking more than 10% of your total drawdown anyways. So in a 50K account, you have $2,500 of drawdown. You should not be risking more than $250 per trade. If you're risking more than that, you're going to blow up. It's guaranteed. So if you just follow 10% of your current drawdown as your max loss per trade, you'll never have to worry about this rule ever. It's pretty simple. So let's say you do break the rule, what happens? So they do continuous monitoring, and if your drawdown does approach this 30% limit, it's not a hard rule. They're not going to blow your funded account up. What they're going to do is they're going to put you on a probation period. But I would not give them an excuse to deny your payouts. Don't give them any excuse. In the static accounts, your 30% rule is essentially stopping you from going down too fast. This is not a bad rule in my opinion. I think it gets a lot of flack, but it's not all that bad. This rule, the 5-to-1 risk reward ratio rule, is also a bit confusing. And I've heard it wrong. It's pretty much just saying that you can't be risking 50 ticks to try to make 10 ticks. Again, if you follow my 10% max loss rule, you won't have an issue with this as well. I actually did a video on how to beat their rules. It is a little bit outdated, but I will put it in the, it goes through how not to get flagged by their system. This was one of the rules that I had put on there. So it does not mean you can't make 500 ticks and risk 50. That's not what it's saying. It's just saying on average, you do not want to be risking 50 ticks to make 10. It's pretty simple, guys. Just make sure your risk reward ratios are not -5. You will not be a profitable trader if that's the way you trade anyways. Just risk a normal amount to 250 in a 50K account, and then your profit should be $250 and above. Actually, it should be above 350 in my opinion, but we'll just keep it at that. Now, that was the major rules. We're going to go over the rest of the rules. There's a lot of rules, as you guys can see here. Unlike a company like Take Profit Trader that has very minimal rules and has ever changed a rule that resulted in it being harder for traders to get paid, Apex, unfortunately, is not a company like that. There's a lot of different rules, so let's get into it. And we just went through these rules here. So the hedging rule, though, is you cannot be both in long in different accounts, period, or different instruments that are correlated. You can't go long ES and short NQ. It's pretty standard stuff. One direction rule, bias trading. In all your accounts, you cannot go long one, short the other. And you can't do this even in different accounts, like a Take Profit Trader account, you can't go long. And then in an Apex account, go short. If they find out, you will never get paid, and they probably won't let you trade with them anymore. So let's just cover different rules I saw here that you definitely want to be aware of. Again, there is a ton of them, guys, and you need to go through and read them all yourself. I'm not going to go into all of them here. I literally just do not have time. Stop loss and risk management. Stop losses are required. Prohibited practices involve all-in trades with maximum contracts, particularly at the start of the PA account. So in my opinion, if you're a responsible trader, a 50K account, you should be trading with 2 contracts. A 25K account, you should be trading with 10 micros. A 100K account, you should be trading with 4 mini accounts, mini contracts. And then a 300K, you could work your way up to 8 if you were a really good trader. But other than that, the fact is that the math tells you if you risk more than that and you're putting on too many contracts, you will blow up. Look up risk of ruin. I will also put the video to that in the description, guys, because it is extremely important understanding this. Proper use of stop losses and targets, planned exits for both losses and profits, trailing stops for protection or profit protection. These should be used. ATM strategies for automation. Apex encourages it. They have so many rules. Consistency and discipline. They pretty much set it up, guys, because they have so much risk on the table. I talked about earlier with these 25 funded accounts being copy traded in large accounts, that they have to have an excuse to deny your payout for any fucking reason. They cannot have this much risk on with thousands of traders anytime and not have that as an option, right? So at any time, just know, like I said earlier in the video, I'm not saying that they're going to do this. I'm saying that they will bust in and possibly deny your payout if they get over risked, right? So that's why you see so many rules. That's why I'm trying to make this video and I'm just like, well, which ones do I choose? I can't choose them all, guys. So I went through the ones that I think are the most important. Let's get into the payouts. This is by far the most important section coming up is payouts. And then we'll get into commissions. We'll get into the platforms you're allowed to use. I want to make sure that this is a all you need Apex Trader funding breakdown. On to the payouts, guys. I refer to this as the final gauntlet. This is a Apex Trader funding payout gauntlet that they put you through to get this money. Let's get into what it actually takes to get paid, because you're not going to focus on this at first. At first, you're going to be focused on the evaluations naturally, because that's the part you're going to be stuck on. Once you start passing the evaluations, you'll be really focused on the funded account rules. Then once you finally get a payout, you're really going to be hyper focused on payouts, and you'll probably leave Apex Trader funding because their payout structure is not that great, but they have low price evaluations with easy rules. So there's different stages to this, and there's different levels to the game. All right, the split and schedule. So the split is very generous with Apex Trader funding. It's always 90%, but the first 25K that you make, you get to keep 100% of that. The schedule, which is a lot better now than it used to be, you can request a payout anytime. There is no window, right? The first through the fifth, that window is gone. But you must have at least 8 individual trading days before each payout request. The minimum payout is $500. Now, this isn't great. It isn't bad. I would say it's like median in the range in the funded space. From Take Profit Trader, which has the best payout structure, payouts from day one, no max, BS, to something like this where you have to trade 8 individual trading days, which is going to be 2 weeks no matter how you look at it. And then you request it, then they take 48 to who knows how many hours it's going to take them to get to it, probably 2 to 3 days. Then you finally get approved, and then you have 2 to 3 more days after that. So you're looking at, minimum of 3 weeks probably until you get paid, right? Once you get a good cycle going, you could probably get that down to 14 days or so. But either way, you're going to be looking at least 2 solid weeks between payouts. And there is more rules, guys. That's not it. So on your second payout, you must have 8 trading days before your next request. So another rule that you must have on any payout is 5 of those 8 days, you must make $50 or more profit. You can't have like huge day and 7 tiny days. Rule 3, the 30% consistency rule. It's pretty much your best day's profit cannot be more than 30% of your total profit you need to request a payout. Now, I think consistency rules are the worst thing that prop firms did in 2024-25. Pretty much every single prop firm implemented them except for Take Profit Trader and Tradeovate. Those are the only 2 companies right now that you can trade with without a consistency rule. Consistency rules are the undercover handcuffs. People focus on trailing drawdown, but they don't realize that they got handcuffs on with 30% consistency rules. Profit days make up most of my profits in my Take Profit Trader accounts. It's not that I'm making a little bit every day, but I'm rather making a whole bunch one day and then a little bit the other days, whole bunch, little bit. But the consistency rules stop you from doing that, but it does not mean that it is not a viable option either, because it still is a viable option. You just need to be aware and you need to see the truth, guys. I'm hoping that I'm super honest and blunt with you guys here and not keep anything hidden from you guys. I'm keeping it real with you 100, that this is what it is. And it is handcuffs, but you can still make a lot of fucking money, as Apex has paid out the most in the history of all prop firms. So obviously people are making money with them. Here's the next rule here, guys. These safety net and payout caps. So this applies to your first 3 payouts. You have a safety net, which you must be over to get a withdrawal. So the safety net goes like this: 50,000 plus 2,500 plus 100 equals 52,600. So you must be above 52,600 to get a withdrawal. We're going to break this down on the Apex website. Okay, how does the threshold work for payouts? So we're going to use a 50K account example. You need to be over the threshold. That is whatever your drawdown is plus 500, add that to your account balance. So here's a calculator here. I'm just going to show you guys how to do it. So we have a drawdown of 2,500 in a 50K account. We go plus 100 equals 2,600. We add that to the account balance at flat, which is 50,000. So 50,000 plus 2,600 equals 52,600. So to get a minimum $500 withdrawal, you would need another $500. So plus 500 equals 53,100 to get your first payout. But you can do something I highly recommend you don't. They do allow you, once you hit 52,600, you can withdraw 500 from that 52,600. But remember, that is your drawdown. That's your original drawdown, right? Because your account balance, once it reaches this level, cannot go back below 50,100. So if you, again, withdraw with inside the buffer, you will blow up your account. I tell everyone this and everyone comes back to me, you're right, I blew up my account. So just don't do it, guys. You didn't spend all that work getting the funded account just to blow it up. Don't fall for this trap. Again, this is a trap. Some people will tell you to do it. They don't care about you and just, they don't care if you fail. Because if you had 52,600, you could lose 2,500 and the account would still be live. But if you remove 500, you can now only lose 2,000, right? So they're hoping that you do this and then you dwindle down your available drawdown and you blow up. So to withdraw the full max payout of 2,000, you need to have the full amount in your account, it seems like. No, I guess I take that back. It's a little bit confusing. So to request the full max payout in a 50K account, which would be $2,000, you would first need to hit the 52,600. So then you could take 500 of that, right? Which would leave you 52,100 and then plus 2,000. So to request the max withdrawal from a 50K account, you have to make 54,100. So you can go through all the guidelines here. We went over just about everything. The only other thing, to get the full withdrawal, you have to have traded through at least 5 approved payouts. So they kind of here, you could do it in as little 48 days, but that is some BS. You would have to you'd have to do it perfectly, but that's not really, trading days is 5 trading days a week. So 48 divided by 5 equals 9.6 weeks. So 9.6 times 7 equals, this actually 67 trading days to get your full payout. So any profit that you make above the amount you could withdraw. So if you in your 50K account, the max you can withdraw is 2,000. Let's say you made 5,000, you're only withdraw 2,000. That would stack on for the next payout and so on. And then this is how traders end up at the end of the 67 days. They have built up a huge account, right? And then they'll take out all of it at once. And then that's why this company has so much risk hanging over their head. Again, there's a lot of prohibited activities. Don't give them any reason to deny your payouts, guys. Don't do it. So which platform should you choose to trade with when you're going with Apex Trader Funding? They have wealth charts, which is a very good charting platform. It is very similar to Project X. It is exclusively for Apex Trader Funding people only. I don't suggest this because this is a more complicated route. Who you definitely don't want to be going with is NinjaTrader. Do not go with NinjaTrader. You have to connect to Rhythmic. It is a very outdated platform. It is a bunch of BS. It lags. I would not suggest it. I just wouldn't suggest it. There's no reason to use it. When we have Tradeovate, the last option here, which I would highly suggest you choose, which is a very up-to-date, newer platform. You can connect it to TradingView, but there is a downside to connecting it to TradingView. To get the 30-second chart, to get the tools, to get rid of ads, you have to add the premium subscription, which is quite expensive during some times of the year. Right now, it's coming up on Black Friday. It's not that expensive. If you guys want to use my code for that, I will also put it in the description, but I would go with Tradeovate, use the Tradeovate platform till you start making money, then buy the premium subscription on TradingView. That would be what I would suggest. So I'm including the commissions in this video because I always get asked about it, but I'll let you guys know right now that in futures trading, they're usually all about the same. And because of how highly leveraged these assets are, the commissions are nothing compared to the amount of money you can make. So with Apex Trader funding on the Tradeovate side, you're going to be looking at about $3.10 per round turn for a mini contract. So that's about $1.50 per entry, $1.50 per exit per contract. For Rhythmic, it is a little, oh geez, they actually raised the price here. So with Rhythmic, again, another reason not to go with NinjaTrader's crap. You're looking at about $2 to enter, $2 to exit. So round turn of $4. That can add up pretty quickly if you're trading a lot. But that's it for the commissions on there. There's nothing else you really need to worry about. As far as other pricing with Apex Trader funding, you have the evaluation cost. If you use my discount, PROVEN50, which gets you the best discount at any given time, you then will have a activation fee per performance account. So how it works, once you pass, you will then get sent the contract and a link to pay. Or it used to be a link, now you just sign into your dashboard and then you'll pay there. It is a one-time payment, or you can choose to pay monthly. I would suggest if you're still failing the funded accounts, just go ahead and pay monthly. There's no point in paying the extra PA account. So here are the PA fees here. So a lot of times they do run discounts where they give you a 300K account with a activation fee of a 50K account. So 50K account, you're paying $160 lifetime. It's a little bit less for the monthly. It's $105 per month, regardless of the account. So that's why I suggest you go with that. If your chances of you blowing it up are even 20%, you're probably better off just paying it monthly. Because if you do have success, you can use the payout funds to pay for it, right? So if you're paying a relatively low price with a 80% discount, you're paying $36 for 50K and then plus 106 all in, you're looking at 142, which isn't bad for a 50K funded account. But if you compare it to Take Profit Trader and other companies that are running discounts right now that are 40% off, you're looking at paying about $100 for the valuation, no activation fee, so you're $100 all in. Let's talk about benefits versus other companies, comparing Apex to other companies. So what are the benefits to Apex Trader funding? The 20 accounts, the low cost for the evals. First, Take Profit Trader, let's say you're still failing evals. This company, day traders, and Bullnox, which I have reviews on each of these on my channel. Apex Trader funding, day traders, and Bullnox are and should be your go-to until you start passing the evaluations. Because if you're paying $100 per valuation with these better prop firms like Take Profit Trader, Trade Day, that's $100, right? For the eval, which you're probably going to fail anyways, right? So just, I'm going to keep it real with you guys. If you're new to this, you're going to have to fail a lot of evals to learn, unless you join a Discord like mine where it's live trading and I can teach you how to pass these quicker. You're going to go through a period of failure. Some people it's 20 accounts, some it's 100. I've seen some traders fail 300 and then find success, but you're going to fail at least 20 of them, right? So we think about 100 times 20 with these better prop firms, that's about $2,000. But if you wait till they're on sale with companies like Apex, Bullnox, day traders, which Bullnox is going to give you the lowest price, which we'll get into them in a little bit here in a second, which you're looking at then on the very lowest side, you're looking at about $17.50 to $19 per 50K evaluation. That's when they have their lowest sale. So, and then the lowest you get it for Apex is usually around, when they run their to 90% off sale, you're looking at about 22 to 36 range, somewhere in there per evaluation. And day traders is really equal to Apex, same original owner. So a lot of their things are similar. So if you time this by 100, right? Let's say with Apex, you go with, on average, you're paying $25 per evaluation times 100. you're looking at $500. So that would be a savings of $1,500 if you went with a company that offers lower priced evaluations. You're going to save $500. Or you're going to save $1,500, and it would only cost you $500 to take the same 20 evaluations, learn the same way. And then it's actually better because these cheaper evaluations are going to have trailing drawdown. If you learn how to beat trailing drawdown, you then can pass any funded account, and you're just going to be an all-star once you figure it out. So I think Apex Trader Funding, Bullnox, day traders are for new traders still failing evaluations that aren't super concerned about the payout structure yet, but still want to be able to get paid out, right, when that time comes. Whether you pass on your third evaluation and then you get your payout on your fifth, by your fifth pay, you still want to be able to have a decent payout for your work, right? Which all these companies offer the same payout structure. You're looking at a max $1,500 to $2,000 for your first payout with each account. And then new traders still failing evaluations. There's phases to this, guys. You'll go through your failing evaluation stage. You'll have a mental block. You'll pass one or two evals. They'll become easy. You'll then blow up your funded accounts. And then you'll go through that stage until you finally get a payout. That mental block's removed, and then you're off to the races. Once you start getting consistent payouts, I would still keep your accounts with Apex and Bullnox and all those companies. I stack them and I still trade them. I'm not super active on them. I push on companies like Take Profit Trader that have payouts from day one, no caps, they have none of the rules. Like Take Profit Trader rules are literally, this is it. Don't hit the drawdown, no news. That's it in the funded account. That's it, guys. Don't hit the drawdown and don't trade news. Everything else, there is no payout caps. There's no consistency. There's no scaling. There is no long list of rules that I couldn't even cover in this video. So if you guys want to get into this giveaway to get the free Take Profit Trader evaluation, which, as I was just explaining, with Take Profit Trader right now, I reached out to them and made a deal with them that any accounts that I give away, you will not even have to pay the activation fee, guys. That means it's 100% free. So if you guys want to get in that into the giveaway, you're going to need to know about my website. So my website is Verified Trader Funding, which is verifiedfundingcompanies.com. This is the VTF YouTube, so you're probably familiar with it, but it's verifiedfundingcompanies.com. Link is in the description. So I'm telling you this because to get in the giveaway, you're going to have to sign up on my website. So if you are on the homepage here, you scroll down to the very bottom here, you're going to have to sign up. That's the first thing you're going to have to do, is sign up for my newsletter. And then anytime you guys want discounts, guys, I guarantee the discounts with these companies. So I think these people promoting these shitty prop firms at no risk to them, I think it's BS, because they have nothing on the line. They can push these huge accounts to you guys. They can push horrible companies that they know are going to go out of business, and they don't care because they're just trying to stack commissions. But what I did to change the game is I said, wait a minute, I guarantee they pay you out. And if they don't, guess what? I'll step in and pay you out. That's what I'm doing with the companies on this website here. So that's step one. Step two, you're going to have to answer these questions exactly as I write them down here. So first question is, which prop firm, aka funded company, do you have evaluations with or are you trading with? So how I separate who entered into the giveaway is how they answer this question. So please answer it this way. I am currently, or just, you don't have to put I am trading with, and then the prop firm company, right? So I am trading with Take Profit Trader, Bullnox, Trade Day, and Apex Trader Funding. And that's it. So you do those two things, guys, you get into the giveaway. The last thing is subscribe, like the video. And the reason that I'm asking you to do all these things is that Take Profit Trader is not giving me these accounts for free. I have to pay the cost of the evaluation, which is $100. They were not willing to give me a break on it for whatever reason. I'll try reaching out to him again. I wasn't able to get a hold of James. I'll send him another email and see if he gets back to me. That's the owner of Take Profit Trader. But if I can eventually get a hold of him, then I could give away 3 or 4 valuations per video. But for right now, it's just 1 because it's out of pocket. So again, enter to the giveaway, guys. I will do a live stream 2 weeks from today, or 3 weeks from today, the release of the video. I will put the exact date and then what time the live stream will be, and we'll pick the winners live on stream. So there's no funny business. It's all pick them random. You guys will see the winner at the time. I appreciate you guys watching. I hope this video helps you choose which prop firm is the best for you guys. Peace out.